Warren Buffett is a legend in the world of finance and investing. Known for his incredible ability to predict market trends and make profitable investments, he has earned the nickname the Oracle of Omaha. He is known as the Oracle of Omaha for his investing savvy, a title that reflects his unparalleled expertise and success in the financial markets. Over the decades, Buffett has built a financial empire, amassing a fortune through his company, Berkshire Hathaway, and making strategic investments in various industries. Now, he might be sending a signal to the market, one that could have significant implications for investors and the economy as a whole. Buffett is considering selling HomeServices of America, a move that has caught the attention of many in the financial world. This is one of the largest real estate brokerage firms in the United States, and its sale could signal a shift in the housing market. Why is this a big deal? Because Buffett's decisions are often seen as a barometer for the broader market. Buffett is known for his long-term investments, typically holding onto assets for years, if not decades. He usually buys when others are fearful and sells when others are greedy. Is he fearful now? Some experts think so, interpreting his potential sale as a sign of caution. They see trouble ahead for real estate, predicting a possible downturn in the market. Buffett's potential move has caught everyone's attention, sparking debates and discussions among analysts and investors. Is this a sign that the housing market is about to take a turn for the worse? Many are watching closely to see what happens next. Let's take a closer look at the factors at play and what this could mean for the future of real estate. This is a time for caution as the market dynamics are shifting and uncertainty looms. Don't rush into any decisions. The market is changing and it's important to stay informed and prepared. We need to be prepared for whatever comes next, as the housing market could be on the brink of significant changes. The real estate market is facing some serious headwinds. Mortgage rates have skyrocketed, creating a challenging environment for both buyers and sellers. They are now at 6.8% for a 30-year fixed loan, a significant increase from previous years. That's double what they were in 2021. This rapid rise in rates has caught many potential homeowners off guard. This makes it much more expensive to buy a home, forcing many to reconsider their plans. Families are now having to adjust their budgets and expectations. As a result, home sales have plummeted. Open houses are seeing fewer visitors, and real estate agents are struggling to close deals. In 2023, existing home sales hit a near 30-year low, a stark contrast to the booming market just a few years ago. Fewer people are buying, and that's putting pressure on prices. Sellers are finding it difficult to get the offers they once expected. Adding to the uncertainty, lending conditions have tightened. Banks are now more stringent with their lending criteria. Banks are being more cautious about who they lend to, scrutinizing every application with a fine-tooth comb. This makes it even harder for people to qualify for a mortgage, adding another layer of difficulty for prospective buyers. These factors combined paint a picture of a cooling market. The once red-hot real estate sector is now showing signs of slowing down. While this doesn't necessarily mean a crash is imminent, it's a wake-up call for everyone involved. Analysts are urging caution and careful planning. The days of easy money and skyrocketing home values are over. The market is entering a new phase, one that requires a more measured approach. HomeServices of America is a giant in the real estate industry. It operates under brands like Berkshire Hathaway HomeServices and Real Living. The company has over 5,400 employees and 820 brokerage offices across the country. However, even giants can stumble. In 2024, HomeServices reported a $107 million loss. This was partly due to a $250 million settlement in a real estate commission lawsuit. This loss raises questions about the health of the overall real estate market. If one of the biggest players is struggling, what does that mean for everyone else? Buffett is known for his sharp business acumen. His potential decision to sell home services suggests that he sees trouble ahead. Section 4. Navigating the housing labyrinth. Advice for homebuyers. Buying a home is a major financial decision. In today's uncertain market, it's more important than ever to be cautious. Don't let emotions cloud your judgment. First and foremost, be realistic about what you can afford. Factor in the higher mortgage rates. Don't forget about property taxes, insurance, and potential maintenance costs. Shop around for the best mortgage rates. Get pre-approved for a loan so you know exactly how much you can borrow. Be prepared to walk away if you find yourself in a bidding war. Don't overextend yourself just to get a house. Remember, buying a home should be a sound financial decision, not an emotional one. Section 5. A seller's market no more. Adjusting to the new reality. The days of sellers calling the shots are fading. With declining demand and longer listing times, sellers need to adjust their expectations. Overpricing your home is a recipe for disaster. Buyers are more discerning now. They are looking for value. Price your home competitively from the start. Make sure your home is in top condition. A fresh coat of paint and some landscaping can go a long way. Remember, first impressions matter. Be prepared to negotiate. Buyers may ask for closing cost assistance or repairs. Be flexible and willing to work with them. Selling a home in this market requires patience and a realistic outlook. Don't expect to get lucky. Do your homework and be prepared to adjust your strategy as needed. Section 6. A crash on the horizon. Assessing the risk in real estate. The possibility of a real estate market crash is a topic that's on everyone's mind. With the market experiencing unprecedented highs, many are wondering if a downturn is inevitable. The possibility of a real estate market crash is a topic that's on everyone's mind. While no one can predict the future with certainty, there are warning signs that we need to heed. While no one can predict the future with certainty, there are warning signs that we need to heed. Affordability is a major concern. As mortgage rates rise, fewer people can afford to buy homes. This could lead to a decrease in demand, which could put downward pressure on prices. Affordability is a major concern. As mortgage rates rise, fewer people can afford to buy homes. This could lead to a decrease in demand, which could put downward pressure on prices. As mortgage rates rise, fewer people can afford to buy homes. This could lead to a decrease in demand, which could put downward pressure on prices. Tightening lending standards are another red flag. Banks are becoming more risk-averse. This could lead to a decrease in demand, which could put downward pressure on prices. Tightening lending standards are another red flag. Banks are becoming more risk-averse. They are making it harder for borrowers to qualify for mortgages. Tightening lending standards are another red flag. Banks are becoming more risk-averse. They are making it harder for borrowers to qualify for mortgages. This could further dampen demand. Investor confidence is waning. Banks are becoming more risk-averse. They are making it harder for borrowers to qualify for mortgages. This could further dampen demand. Investor confidence is waning. They are making it harder for borrowers to qualify for mortgages. This could further dampen demand. Investor confidence is waning. Buffett's potential exit from the market is a sign that even the savviest investors are getting nervous. This could further dampen demand. Investor confidence is waning. Buffett's potential exit from the market is a sign that even the savviest investors are getting nervous. Buffett's potential exit from the market is a sign that even the savviest investors are getting nervous. While a full-blown crash is not a foregone conclusion, the risks are real. While a full-blown crash is not a foregone conclusion, the risks are real. It's crucial to stay informed and be prepared for any eventuality. By keeping an eye on market trends and understanding the factors at play, we can better navigate these uncertain times. It's crucial to stay informed and be prepared for any eventuality. By keeping an eye on market trends and understanding the factors at play, we can better navigate these uncertain times. Section 7. Charting a course. Practical advice for real estate investors. Real estate can be a good investment, but it's not without risks, especially in the current climate. If you're considering investing in real estate, proceed with caution. Don't assume that prices will continue to rise indefinitely. Do your research. Understand the local market conditions. Look for properties that are undervalued and have good rental potential. Be prepared to hold on to your investments for the long term. Don't expect to get rich quick. Real estate is a long game. Consider diversifying your portfolio. Don't put all your eggs in one basket. Explore other investment options to spread your risk. In these uncertain times, knowledge is power. Stay informed about market trends and be prepared to adapt your investment strategies accordingly.